All right, I'm here today with Jon Coppleman. Jon is a resident expert for us involved with workers' comp analysis for many, many years. Jon, how long have you been in the workers' comp field?
I started in 1990, which is at the same time that Massachusetts was a disaster in workers' comp, one of the ranked third highest cost for all states, and I've been involved in it ever since.
Yeah, great. And Jon comes to us through our affiliation with Renaissance Alliance. This is probably one of New England's largest aggregators, an insurance exchange with over $600 million in written premiums spread over 70 insurance companies that provides us with a tremendous buying power in the marketplace, unprecedented these days with premium level that size. Jon, tell us about some recent changes have been in the news on workers' comp, notably that rates are going down, which is good news for mass employers.
Yeah, this is actually a bit of a surprise, Paul. That we already are ranked 44th for cost, meaning that number one is the most expensive state. That would be California, and we're ranked 44th near the bottom. And we've just approved a 12.9% reduction in rates effective July 1. And that's the largest rate going back 15 or 20 years. This is a huge deal, and it's probably going to put us in the top 3 or 4 for low cost in workers' compensation.
You know, with the businesses that I deal with, I can tell you that many of them are quite amazed that Massachusetts ranks where it is in terms of pricing for workers' comp, and I think many of them are pleasantly pleased. I'm sure they're pleased that the rates are going down, but somewhat surprised because it goes back to the old adage of Taxachusetts.
Absolutely, and we're not in Taxachusetts anymore.
Exactly.
It's not in this regard. There may be other lines of insurance that are pretty high. One of the points I would make, Paul, is that a 12.9% reduction does not mean all rates go down 12.9%.
Right.
The average across all the 560 some odd classes, it has to average 12.9%. But I'll give you some examples of rates that dropped a whole lot, and even a couple of cases where rates went up.
Yeah.
As long as the average is 12.9, that's all that the state regulators care about.
And you know we're dealing primarily with trucking and construction, so if you have some of those...
So the trucking, the basic trucking rate, trucking NOC 7219, the current rate is $9.70 per $100 of payroll. Whenever we talk about rates, it's always per $100 of payroll. So it's a 9%, almost 10% tax, if you will, if you had a mod of 1.0. That rate's dropping to $8.41. So that's a fairly substantial drop between as of July 1. That means if your policy began between January 1st and July and June 30th, you're going to get the old rate. You're going to pay $9.77. But if you have a policy that began after on July 1 or later, you're going to get the lower rate. And historically, back in 1995, the rate for trucking was $13.55. So it's come down a long way. It hasn't come down as precipitously as some class rates have, and that's because trucking remains a relatively high-risk occupation with lots of, obviously, the hazards of being on the road, but beyond that, it often entails material handling, loading and unloading trucks.
Yeah, we find that, getting on and off the cab, working around the flatbed has been really the cause of most of our injuries rather than accidents.
Yeah, statistically that's correct. That's where most trucking accidents happen. Exactly where you described. We could talk about a couple other classes that for construction. Masonry